Well, g'day and welcome to the February 21 market update from Loan Market Richmond. It also serves as the goodbye 2020 from us, so we're going to summarise 2020, put it in a box and wave it goodbye. I first want to look at the property outlook. If I move across to this slide, you don't need to be able to see it, but I refer you to the CoreLogic Home Value Index report, which we put in our monthly e-news each month. And I'd recommend that you check that out. What it's saying for Sydney market is that the past 12 months were a rise of 4.6, which is quite surprising and quite impressive. Also interesting that economists are predicting in the next year the property market to be okay, solid, sneaky up, maybe 2%, 4% up, and next year, 2022, to be a strong year. There's certainly a lot of energy and a lot of optimism right now. If I look at the next slide, I'm going to show you the interest rate outlook. Here we go. So this is the Reserve Bank cash rate site. So back in around 1990, extraordinary high. Everyone's heard a story about that. That's about when I bought out my first house with my wife just then. Strong trend down into 95, long-term downtrend, but we had interest rates around 7 to 10% for home loans through most of this time. Then in 2010, it got down to around 7-ish%, and it's all been downhill from there. So the cash rate of 4.75 in 2011 equates to a home loan rate of about 7%. And then it's been downhill, nothing but. Cash rate right now, 0.1%. So what that means is the banks buy money at something like that, and they sell it at something like 2.5%, 3%. The net interest margin is 2%, which is the bank's gross income on a home loan. So say $10,000 per year on a $500,000 home loan. In terms of recent times, so since middle of 19, there's been a 1.25% drop in the cash rate, and one analyst says 0.86% of that has been dropped on to home loan customers. So about 0.4 wasn't passed on. Last year, if you sneak down on the Reserve Bank site, there was 3 drops last year. In March, there was a 0.25% drop. That was fully passed on to home loan customers. In late March, there was another 0.25% drop. That was mostly to do with business incentives, business subsidies, home loan pauses, and other provisions. Fixed rates dropped around that time. And then in November again, 0.15, which wasn't substantially passed on. But the bottom line is home loan rates right now are really low. With a cash rate of 0.1, it's quite incredible. Interesting to note that the Reserve Bank governor says he doesn't want to go negative, and that his commentary is that we're in a long-term low rate environment. We're well below their inflation target. There's lots of issues like unemployment that are suppressing the market or suppressing growth, as is lack of immigration, lack of tourism. So we'll watch this space, but right now it looks like a low interest rate environment. How that transcribes to home loan rates, just out of interest, is really optimistic for the punter. So home loans around 2.5 to 2.7% variable, tiny bit higher maybe for the major banks. That's principal interest home loan variable. If your home loan is fixed, then that's more like 2% for say 3-year fixed or 4-year fixed. That's pretty amazing. It might be you have a combination of the two, and we could review that. With interest-only fixed loans are incredible. There's some investment interest-only fixed loans at under 2.3%. The market for interest-only fixed loans for 3 and 4 years is around 2.7%. So that's quite incredible, and that's a big drop. So if you have investment properties particularly, I would highly welcome and encourage a review. I think you're going to be pleasantly surprised how much you can save on those. In investment variable rates, certainly 3% and sneaky above or sneaky down for principal and interest variable investment. which again is a significant drop from historically where they used to be higher than home loans. So if you haven't reviewed them the last couple of years, I'd highly commend that. Other features of last year, we had a big campaign in our office for repricing of existing customers that we're super proud of. I sort of battened down the hatches in March, April, May. It wasn't very good for new business because I was telling people, let's just wait and see on the property outlook. And when you feel good, that's great. But I wasn't overly encouraging, particularly people who were stretched out or first home buyers or high percentage loans to be too imprudent. Certainly my confidence grew through the year for sure. When we're in a phase of a little bit of uncertainty and people really watching their dollars and the like, we had a huge campaign for repricing home loans. And we're really proud that through last year, we reduced our current customers' home loans by in the order of $12,000 per month across our client base. So we're super proud of that. Other features of last year were the home loan pauses. There was a very large percentage of people that put their repayments on pause, either who needed to because of loss of job or reduction in job hours, some who didn't need to because the banks were pretty loose in handing that out. Most of that is now back onto normal repayments. Some people item by item are negotiating with their bank, but a much smaller number are now still on home loan pause, and most of those are finishing soon. Bank turnaround times have been really affected, partly due to COVID and staff practices and office practices, etc., but partly due to responsible lending laws, where the banks have an onus of assessment of people's situation and verifying everything that they send them and verifying the cost of living that the clients declare. So at the moment, that's a fairly high requirement by the banks, but their turnarounds are pretty unacceptable for the major banks, and particularly annoying if the branch can do it faster than we can. Now that's very, very annoying when that happens, but in the main, we can and do find fast solutions. We have a strong number of lenders who have great options, major lenders, well-recognised brands that can get the job done. We want it fast. Every client's okay with a delay until we get to about day 2, so we just won't take it on if we think it's not going to get the job done for the customer. The outlook looks very optimistic and positive. I'm very optimistic and positive. Our office has been very, very strong. I hope that you and your family haven't been too affected in this last tough year, and that the next year is a strong one for you. Looking forward to seeing the vaccine rolled out this year, and hopefully that has a great positive impact on us for the future. Been a bit of a long update this month. I hope you've enjoyed it. I hope you found it insightful. It's a pleasure to help you and your family and friends. Give us a call if you want to chat about anything. Hope you have a great year.